Okay, this week we'll be looking at the FTSE 100, the GB pound versus the US dollar, gold and wheat. Reason for me picking these, obviously the FTSE is very relevant to what's happening in the UK at the moment, gives us a good indicator as to where the economy is likely to go. The pound versus the US dollar is obviously our currency. Gold is the flight to safety instrument, and wheat being the most sold commodity for food in the world. Gives us a good idea of a sort of a snapshot of where the world is headed. This is a daily chart of the FTSE 100 index futures, and you can see that the market has been grinding up, but we've got a very specific pattern here. It's called the three drive pattern. It's very, very bearish. We've got 1, 2, 3 drives to a top, and it's hit a major Fibonacci level of 50%. Much weaker than the US S&P 500, which has actually made the 61% retracement. We're in a channel at the moment, and here we're reaching a critical point. If it doesn't bounce and go higher, obviously this is due to go much lower and could easily take out these lows in the coming months. I'm going to scale down to a smaller time frame. And this is the 30-minute chart of the same FTSE 100 index, and this leg you see is the final big red bar that we were just looking at on the daily chart. You can see the market has been grinding down with very little retracement, just tiny retracement here, tiny one there, and a very small one there. It gapped down on this day and has just been drifting lower towards that bottom boundary of the channel where we've got the potential support. This doesn't look very promising. The retracements are very small. It looks extremely bearish to me, so that's one to watch going forward. Moving on to the British pound versus the US dollar futures, we can see that the market closed on Friday at 12488. There's a potential head and shoulders pattern here. We've got the head there, a shoulder. The neckline is the bottom of this parallel channel. Again, it's one to watch. If it breaks, then this could break down much lower. Potentially also we've got a potential to come up to this area here, which is again within this parallel channel and is the last Fibonacci level, way up at just over the 128 mark. Again, we're in just below the center line of the channel. I think if the FTSE comes off and continues lower, the pound is likely to follow also. So again, the area to watch for the breakout is the bottom of this channel, which is also the neckline of the head and shoulders pattern. Obviously, day traders would be trading the smaller time frames in this. It's highly likely that it's going to head lower towards this bottom boundary. So Monday you should be looking for shorts. Moving on now to gold. Okay, so daily chart of gold. As you can see, the flight to safety can clearly be seen here. Gold is very close to its highs. This dip here occurred around about the 19th of March, where it sort of tested lower, and as you can see, it's just been up all the way from there. If you're looking at buying gold, then the sort of pattern you should be looking for is the last swing low, which is this one here. We'd draw our Fibonacci lines up, and we'd be looking for an ABCD pattern going against the trend. Should be down to this area here. This, my students will know, is what's called the bullish Gartley pattern. So you'd be looking at sort of buying gold at around about this area here, which is 1645 area. So you'd be looking for gold to come off a bit further. A little bit further, so there are opportunities for shorts in here. So if you're going to trade this on Monday as a day trade, you'd be looking for shorts to come down to around about this area here. So there's gold confirming the flight to safety. Next we'll look at wheat. Okay, this is a daily chart of wheat, and here we're looking at again a very large parallel channel in between which price is swinging from here to here to here to here. We've seen the market pull back down to the 786 retracement level. I doubt that it's going to make the bottom of this channel. It looks to me like this is ready to go long, and the confirmation of that would be the break of this area here, where you can see the market has come off the 786 Fibonacci level, has bounced and is now retesting lower. So to go long in this would be, you'd be looking at the smaller time frames, looking for a valid pattern for your risk management to try and go long, which I would prefer to do down here so that the risk is smaller. The reason why I don't think it's going to make the bottom of the channel is because these Fibonacci levels tend to repeat themselves, and this large one, again, if we take our Fibonacci lines and measure what the retracement was on a downward, again, it made the 786 here. So this is merely a fractal or a smaller version of this one. So this would be a good opportunity to go long in wheat, given of course that it is a staple food of the world, and right now with the crisis that's going on, many shops being closed, lots of people sort of storing up sort of flour and stuff like that. I'd imagine that there is a good case for going long in wheat. So that's this week's analysis. Thank you very much.